Can you guys smell it? Smell it? Summer is in the air. It's my favorite time of year. I absolutely love summer. So as we get into summer now, the stock market volatility, particularly in the United States, is at extreme lows. Both the historic volatility and the actual implied volatility that options traders should be kind of baking into what they might expect in terms of the future for any surge in volatility. To make a long story short, I think this really means that the bears have capitulated. The bears, for all intents and purposes, have stopped fighting this market and they're done. They're dead. A lot of institutional investors I speak with, they have basically thrown in the towel in terms of making any bearish bets, and they're just jumping on board, buying all these large cap tech stocks like the Googles, the Facebooks, the Apples. And while I think those are great stocks, guys, I have to say I'm starting to get more and more nervous as we start getting into the summer period. Now, there are two quick things, and I'm going to show you guys two quick charts in a minute. The two big things are this. Number one, the low implied volatility environment can continue for some time. And number two, you got to start positioning for these things when implied volatility is very low. So let's talk about what this capitulation of the bears means and how we can prepare for it for what's going to come next.
I just positioned the camera up there. If that's weird, let me know in the comments down below. So let's talk about it really simply. The trade that I see setting up here into the summer months is to very simply buy some protection in the S&P 500 through either puts, or you can do straddles. So let's talk about both of those scenarios. It's a trade we've already put on two weeks ago for Clubhouse members. We made a quick 12.5% in a matter of a couple days on that trade. We closed it since. But I think now, more tactically or even more structurally speaking, heading into the summer, we got two things that we need to be concerned about. Number one is this very, very low implied volatility. If you look at the VIX here representing the volatility or the implied volatility of the S&P 500 options, it basically represents the absence of fear at these levels right now. You can see as of right now, the VIX is just basically just a touch below 10. And while I do think it could go lower, historically, this is a very, very, very low level. Just looking at this with a simple glance at it, you can see these kind of environments don't last long. We had a quick sort of outburst a week and a half ago, so where the stocks quickly dropped for one day and implied volatility spiked. But other than that, we've come right back down to it. So I think this is going to set us up for an opportunity here to start buying puts protection of the S&P 500 and start legging into it. I don't think this is an opportunity to start buying it hands over fist, because I do think stocks could go a little bit higher here over the next potentially the next say few weeks or so. It's entirely possible the S&P 500 starts melting a little bit higher. I think the lack of sellers of being able to push the market lower is telling. So I would not be surprised if we can see the S&P rally another whatever 3 or so percent, maybe getting it close to 2,500, maybe 2,475 ish. But regardless, I think it's an opportunity to start buying a little bit of implied volatility protection. In other words, protection of the S&P. So the way I like to do is I like to buy at the money puts, usually looking out a few months. At this point, I'm probably going to be looking out to the month of September to start looking at buying a little bit of protection. So the point here is to leg into a trade like this and not go all crazy, because the implied volatility can remain low for an extended period of time. So I think if one were to buy a September 240 strike put, and then ultimately maybe even a straddle where you buy both a call and a put, I think that's a pretty good opportunity here, because ultimately what's not sustainable is the VIX being that low, and also what's most likely not sustainable, at least for the near term through a multi-week, maybe multi-month lens, is this rally in the NASDAQ 100. These are led by a few stocks. These are good stocks, and I believe in all these stocks, the Facebooks, the Apples, Netflix, Microsoft, all these stocks. I think they're great stocks. But the continued, and the Googles, and the squeeze of this magnitude usually ends with a somewhat of a drawdown of maybe 5 to 10% in something like the NASDAQ 100, which quite frankly, more than anything, would simply be healthier right now. So as I position myself, or as I'm looking to position myself for the summer months, that's my primary task here, is to start protecting my portfolio and maybe even buying a few more puts than my portfolio allows. In other words, almost getting a bit of a bearish posture on, so that any any position I put on will actually make money for the entire portfolio and not just sort of act as a hedge, if you will. So that's the main thing I'm looking at. As a quick note, we have been doing a lot of great trades in the clubhouse. I just yesterday sent out this text alert to folks that I bought some July 27 strike puts in the OIH for 97 cents. I sent that out in real time. I set the price target at $26 in the OIH, and we're almost there. The puts are now worth $1.50, so almost 50% more. And we also closed a Starbucks trade for 30% profits. So a lot of good stuff. If you guys are interested, thestudytrader.com/trial. You can check that out. But anyway, in terms of getting prepared for the summer, guys, this would be what I'm looking at here is buying some protection in the S&P. Again, not because it can't go higher, but because the implied volatility is so cheap right now that it's pretty much almost a free bet if you use say September options, so to kind of position yourself and then maybe add more as the S&P starts to climb a little bit more, maybe towards 2,500 or so. Hope this makes sense, and have a great long weekend if you're watching this before the Memorial Day weekend, and I'll see you in the next video.
Also, guys, I'll tell you that we just opened registration for our next Mastermind workshop. It's going to take place in Boston, Massachusetts, June 11th through 12th. It's only going to be $197 for the early bird pricing instead of $797 as usual pricing. So you may want to come and get that pretty quick before the price goes up. It's going to be a full 2-day of mentoring session. Really great stuff to get you to the next level of trading, finally get you profitable, and we'll create a personalized trading plan for everyone that shows up. We'll talk about options trading, we'll talk about stock trading, we'll talk about near-term time frames, longer-term time frames, we'll talk about getting you into a rhythm so you can fit this into your current lifestyle. So go to thestudytrader.com and click on information page for the Boston workshop on top there. Again, it's just $197 for 2 days. We're going to do this for early bird pricing right now, and then we'll have to raise the price